Hey champions, and welcome back. In this video, what I'm covering is asset allocations that could be used as allocations either in a 401k or in an IRA you're maybe looking at rolling over. Now, an important part of investing is knowing what investment allocation you should be in based off your retirement timeline. You see, what investment allocation is, I think of it like on social media, how you could answer a few questions like in an app or something, and it will tell you, hey, this is what kind of superhero you are. It just tells you what kind of investor you are based off your time frame until you retire. Okay. And so for an individual who's very close to retiring, because you might be doing a rollover and in retirement, right? Or if you're going to be doing a rollover and you're going to be retiring within like 1 year, you actually should be an income portfolio allocated investor. And that's super important because you should be looking at stocks and companies and things that have a consistent interest rate or have a consistent dividend rate, because you want a reoccurring paycheck and to preserve what you have rather than trying to hit home runs and things like that with really aggressively invested companies. Okay. And so income portfolios is what we recommend for someone who's in retirement or going to be in retirement within 1 year. Anyone who's within 2 to 3 years, we actually recommend you should be a conservative growth investor. Okay, so that's where you're going to still earn some interest. Usually, on average, a conservative growth portfolio is going to earn around 3 to 5% interest on it, because you don't need like massive home runs. You got to preserve what you have, but still grow a little bit if you're within that the 2 to 3 year time frame until you retire. You don't want to be doing risky things with your money then. Okay, and so if you're 3 to 7 years away, you could actually be a moderate growth investor, because if you have 5 years to invest in the stock market, what's happening right now or even this year doesn't really matter as much as the next 4, 5, 6, 7 years will be. Okay, and so you could afford to go for some home runs rather than bunting the ball and go for some home runs and being a moderate growth investor. Okay, if you're 7 to 10 years away, then you actually should be a growth investor. That's where you are, investing maybe in smaller companies or companies that just reinvest a lot back into their company and their stock prices are increasing consistently. Then a growth investor for someone 7 to 10 years away from retirement is a super important thing. And if you're over 10 years until you're going to retire, you actually should be an aggressive growth investor. That's where you're going for the home runs, the grand slams and stuff, trying to get a higher interest rate. That doesn't necessarily mean risky. That just means you're invested into companies that are more aggressively reinvesting and growing their stock price. Okay. And so if you follow those allocations, your IRA is going to perform exactly the way you need it to. And so the closer you get towards retirement, the more conservative and less aggressive you want to be. If you're farther away from retirement, you do want to be more aggressive with your investments. So now that you know about asset allocation, if you have an IRA that you would like to get optimized for your specific goals and dreams and your investment style, go ahead and click the link below this video and you can schedule a free introductory call with my agency.